Welcome back to the channel for a quick update on Bitcoin. Before we get started, I'd like to remind you it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, we're looking at a Bitcoin chart. I'm on the 4-hour Coinbase, and basically, just looking at the same thing. Essentially, we had drawn in the last video where we basically broke all this down. I'm gonna pull off the moving averages here for a minute. It's a little convoluted, but we had basically drawn in like this, potential descending resistance, and basically after that we got the pop up to it, kind of ran into it a couple times, and then we finally got the breakout above it. But essentially it was just like a thrust up, stop hunt maybe, and then failure, come back down, retested the breakout point, and we fell straight through it. And now what we're doing essentially is we're looking to basically come down here and retest that parabolic orange trend line. So we had talked about the purple trend line, we lost that slope, and then came back down and we formed a red trend line, and we found support on that multiple times, lost that slope, and then we essentially have like the channel, which is the third of the parabolic trend lines on the bottom here, and then the top is the top of the channel right there in orange, and then the heart line in green coming through the middle here essentially has acted now as support and resistance on multiple occasions. So when we already had this channel drawn out in here too, so we were able to see by using the parabolic trend line on the bottom and the channel here on the top that the most likely thing to happen when we did break through was to find resistance at the heart line. And when we consolidated there and then broke back down and failed to put in a higher high, what we're looking for essentially is now like a micro fib on the shorter time frame. So although we're on the 4-hour time frame, all we're going to do is take the fib retracement from the top of this move right here where we were at 7,500 basically, and we came down on that wick down to like 6,500, $1,000 move. We get the bounce back up, and where did we go up to? We came up and almost got to the 886, right in between the 786 and the 886. That's a harmonic pattern. Obviously, as soon as that failed to break higher and we couldn't take out this high right here, we confirmed to the market that we had put in a lower high, and then we took out, obviously the previous low now is what we're paying attention to if we take out this low right here from before that high. So we put in this high, we put in a low, we put in a higher high, we put in a higher low, but then we failed right here to put in the higher high. It doesn't mean we can't still just consolidate here, break back out, and put in that higher high. But what the market is looking for now is, are we going to come down here now? Are we going to take out this low? Are we going to take out this low? Because that's really telling the market now that you're essentially like confirming a downtrend has begun, inside of the shorter term uptrend, inside the longer term downtrend. So now here we are. We broke back basically inside of this triangle that we formed. And now essentially we're just going to see what happens right here. I mean, there's so much key support and resistance levels here, but as soon as we basically fell down from that 886, what happened? We came straight down here to the 618 in orange, 618. Then we came back up exactly to the 786. So if you don't believe in fibs, I don't know what you do believe in. Touched the 786 exactly, came straight down right afterwards to the 0.5, bounced it back up just above the 618, came down exactly to the 382, bounced it back up to the 0.5, and now what's going to happen next? We're going to come down here, most likely going to come up to the resistance, which was our support previously that we broke through, and then come back down to the next fib level. So now what I have drawn here in blue is I have the fib drawn from the bottom wick down here now to the top of the move that we retraced almost back to the 886 of this peak right here. And now you'll see, now look at the confluence on these fibs. We came down, we put in the top right here, we came down immediately and closed the 4-hour just above the 236. So we came down and we wicked to the 618 of the orange fib, and then we closed at the 236 of the blue fib. And then we got the bounce back up to the 786 with the wick again, pay attention, with the wick again to the 786, and then we came down here, and look, the wick got to the 0.5 in orange, but the close is right at the 382 in blue. And then we come back up here, same exact thing, close at the 236, and then what is it? 2 fib levels, 1,000, to 1,000 and a little extra action because of the violence of that candle when we broke the support. Come down exactly to the 618 candle close. Look at that. Look at those candle closes at the exact blue levels. One candle close, two candle close at the levels. Bounce up here, come back down. One candle close, two candle close at the level. Come back up here. One candle close, two candle close at the level. Come down here. One candle close, two candle close at the level. So, I mean, what's going to happen right here, guys? What do you think? I think we bounce up here, and I have a feeling, if I had a guess on, what's been happening, that we're going to close this 4-hour candle tonight at midnight. I have a very, very strong feeling it's going to close at either 68.68 or 69.72, or if we just all of a sudden get a big sell-off, it could close down here at 66.28. But I mean, I would, oh wait, did I skip one? 67.65. I would, guess, I would assume, I would go as far as to say I bet money on this 4-hour candle close at one of these levels. So this one started here. This was the 8 o'clock right here where it opened. So the 8 o'clock was not at one of these levels. I have a feeling, though, the midnight is going to be either right here at 69.71, which is most likely, in my opinion, because what is that basically is we broke down from the support. We broke through the support right here. We tested it, we broke it. Confirm close. And now we're going to come back up and try to test it as resistance. Try to see, can we get back up here and keep moving to the upside? Or is that now going to stop us and then we're going to sell back off? And if we sell back off, you would assume that we're either going to come down to the 0.5 and then rally and put in a higher low and come up, or we're going to come back down like same low right here, retest this orange support line, or worst case scenario, you know what I mean, we're going to come down here and break that support line. Now look, based on statistics, the most likely thing that's going to happen is we're going to trade inside this range until we don't. So we basically entered into this channel. It was already basically acting as resistance through this area right here. So from mid-March, we've been essentially respecting this entire channel right here. So what's the most likely thing that's going to happen is we're going to break here and keep going back to the upside, and we're going to continue respecting this channel. And when's it going to break? The one time it breaks, we'll know it's broken. We'll confirm it as resistance, and then we'll look for it to essentially come down here and take out like the parabolic trend line in orange here, and then we'll actually like start putting in like the even swing or a lower swing, and then obviously like start trending back to the downside. But that's what we're looking for at this point in time. I mean, I'm still not convinced that we don't get that push back up here and finally fulfill this fib. I mean, there's a lot of confluence at this level right here. You see how many lines are just stacked up in that one spot at like 7,900. So we made it this far. We bounced all the way back from 38.50 to 70. I mean, I think the highest we got right here was 7,500. So I mean, you don't think we could get that extra little $400? You don't think we could get up to 7,900? I think we can. I think there's enough strength in this market with the bots and algorithms and market makers. I think that they could lead this back to the upside. Now, I'm not saying we don't just immediately sell off and dump back out of here, etc., etc. That's fine. But the most likely thing to happen at this point in time is that we're going to continue trading inside this channel until we don't. So everybody's saying, oh, the big break's coming, the big break's coming. Chances are it's not. Statistically, the big break is not coming. Statistically, what's going to happen is we're going to trade inside this channel. So, I mean, we came up here. We were at the very top of the channel. You come down to the middle, and then you come down to the bottom. So then we bounce off the bottom. We come up to the middle. We bounce off the bottom. So if we don't tag the bottom right here, I would think that's a sign of strength if we don't come all the way down to it. So then we would be more likely to put in a higher high right here. So I think that if we start rallying off this point and get back above this white trend line right here, the short-term descending trend line that was acting as resistance, if we get back above it, I think we're going to bounce up here. I think we're going to take this out. I think we're going to come up and at least tag the 886 at 73.37. And then if we can take out this high here finally, I think we're going straight to like 7,900. And then after that, violent dump. And the dump could come first. I mean, I'm not saying it can't. I feel bad because I put out all this technical analysis and a lot of you guys are new and you think that I'm just always bearish. But that's not the case. We're just in a macro multi-year bearish downtrend inside of a, decade-long macro uptrend. So at this point in time, macro, long term, I'm bullish on Bitcoin. I believe in Bitcoin, all the fundamentals and all that good stuff. Technicals, trading wise, still bearish. still bearish. I'll take, like I said, I'll take scalps through this area, and took some nice trades throughout this entire range, and had a lot of good like range trades inside of this area. But I'm not looking for any long-term accumulation positions at essentially what amounts to the top of a range. So, and then actually, you know what? While we're at it, I'm just going to, matter of fact, what should I put up? Should I do the S&P? I just want to use this as an example of basically, I have no clue what this chart is. So, basically what's going on right now, everybody is getting bullish, acting like they don't understand what's going on, why we got this bounce up here. Look, from the top to the bottom to the 618 exactly. The 618, the golden retrace we just hit here. And it just so happens the golden retrace lines up with all this support / resistance, the strongest zone in all of history basically for the S&P. So at this point in time, I think we're about to get a strong rejection back to the downside. Now, do we have to put in a lower low? Do we have to come down here and take out this low? No, I do not believe we do. Do I think we will? Yes, I do. Is it possible to account for modern monetary policy and buying of assets and printing of money and all that? No, it's not. So at this point in time, I don't know that we're necessarily going to take out this low right here. But I do know one thing. In my opinion, we're not going to take out this high right here, anytime soon. I think we're much more likely to come back down here and retest the lows than we are to retest the highs. But again, you have to be very careful in these markets right now because technical analysis is much less reliable in, essentially like a multi-black swan event, world economy crumbling. Honestly, this thing should be way lower than it is right now. So that's how you know that this is all speculations and not like true investments in companies, because most of these companies are like basically like bankrupt or going to be bankrupt if Uncle Sam and the Fed doesn't bail them out. So in all reality, those companies should go to like near zero basically. So essentially, oftentimes, those companies will sell off like below what the actual value of the assets that they have on their books are. So you'll see them like dump ridiculously, and essentially like overcompensate for the sell-off. But we're not really seeing that. We're not really seeing that right now. And that's what tells me that this is essentially just like, this is a chance to get out. This is in my opinion, this is a chance to de-risk for like big money. Nobody cares about us. Nobody cares about regular people. This is for big money. This is essentially like, in my opinion, this is the Fed, and Wall Street pumping the price back up so that they can essentially exit out of their positions at what amounts to probably, for most of them, like, somewhere around break even on a lot of those positions. Just because this consolidation range was so long, essentially, if you look at this as like the median and like this is the top of the median, this is like the bottom of the median, we're kind of like zeroed out in the middle right here. So in this area is where most people will probably be looking to like de-risk. So if you're no longer confident like you were through this area that price is going higher, or through this area that price is going lower, you tend to de-risk and then wait for like resolution in the market. And once we start like trending or whatever, you'll get back in a position. But at this point in time, I think probably most people are looking to take shorts out of this area. I'm not saying we can't push up a little bit. I mean, we could get as high as the 786, but I don't think so. I think it's very unlikely that that's what's going to happen. I think it's much more likely that at this point in time we bounce the fib, come up 2 levels, down 1, come up 3 levels, and I would think at least down 1. So my next target would be 272, but realistically 258. And then if we are topping out, come back up, test it, sell back off, and then starts looking like a weird head and shoulders. We get those a lot where you put in like a shoulder, a head, and then this is still part of the head, comes down and then puts in another shoulder, and then we'll sell off. And I think that's the most likely thing that's going to happen. Because to tell you the truth, but I don't want to get into this, make it a whole big long video, because honestly, I don't feel like doing any editing. I'm just going to run this. So basically, what I think is going to happen is, the whole economy has to crash down because hyperinflation can't take place too soon. Because if hyperinflation just takes place right off the bat, essentially like everybody just pays off their debt and then like it's gone. So there's no problems. And that's not what happens during recessions and depressions. Like, that would essentially be like the solution. If like all of a sudden like the US dollar just like hyperinflated, and let's say you owe like $100,000 on your house and your credit card bills and all this stuff, if all of a sudden like the dollar just hyperinflated tomorrow, and like, instead of like a roll of toilet paper costing $1, it costs $100, then like if somebody was going to pay you for like a car or something that's worth $100, all of a sudden that item that's worth $100 is going to cost 100 times more. So it's going to cost you like what, like $10,000. So if you just sell like $1,000 worth of assets at 100 times hyperinflation, that $1,000 in assets is worth $100,000. Therefore, you could just pay off your debt, and hyperinflation would like essentially like solve the problem rather than like contributing to the problem. So essentially, like my point being that the initial hyperinflation is due to like supply chain shock. So certain items will become like rare or more desirable or like a necessity. And they're like selling out of them like crazy or whatever. Like we saw hand sanitizer was like going for ridiculous amounts, and toilet paper and masks and all, stuff like that. But over time, that goes away. And then what really happens is like, basically like nobody has any money. Everybody lost their jobs. Nobody has any money. Everybody's like super tight with the little bit of money they do have. Like, they're probably getting it from the government, and it's probably just enough to like get by. So they're not spending it. So there's no like essentially like solvency or liquidity like in the markets. So you can't sell your car. Your car's blue book value might be like $10,000, and you're like, oh, we don't need this third car anymore. Let's sell it for 10 grand. And you like, look on Craigslist or whatever, and the going rate's like $4,000 for similar cars because no one's in the market for cars. So essentially, like everything is just super cheap because nobody's buying anything. So like that's essentially like the economy like stagnation, and because the U.S. economy has essentially driven the entire world economy through like consumerism and like the throwaway like lifestyle that we've like all indulged on with not only like our consumable goods but like people and relationships as well. I think what's most likely going to happen is like the stagnation in the United States is going to lead to like global stagnation. And if the United States government doesn't get it right, which this is not a political, video, but it doesn't look good so far. They're like still bickering with each other and just trying to figure out how they're going to all come out on top of this. But I don't think anybody's really concerned with like, the actual people, or has the best interest of the people in mind on any side of any of these parties. So essentially, I think more likely than not, they're going to mess this up because there is no like, cookie cutter bill for how to get out of this situation. So, I think it's going to probably get a lot worse before it gets better. And the people that are like savvy to it and paying attention, right now through all of this are going to be like ahead of the curve, because essentially there's going to come a time, and this is where the millions are made and like the fortunes are gained, and like you have the chance to move up a class like in society essentially. There's going to come a time when people are going to be desperate just to sell anything and just get cash or money or whatever goods, and you'll be able to go out and buy like that sweet Lambo you wanted, only instead of costing a quarter of a million or 100,000, all of a sudden you can get that Lambo for like 60 G's. I mean, if that's what you're looking for. And, it's going to be like that with a lot of stuff. A lot of stuff like that. Because things that people consider to be like an asset or whatever are not really an asset. Like a car is not an asset. It's a liability. I mean, if it's paid off, maybe you could consider it to be an asset. But in all reality, it's a liability. I mean, most things are. Even like properties, like houses and stuff like that, realistically are, they really are liabilities. They cost you money over time if you don't spend that money on upkeeping them. Like pieces of property, you could argue, is more of, actually like a real hard asset. as where like a building on that property is technically, if you break it down into like you know the most basic sense, it is essentially like a liability in the fact that you probably have to carry like insurance on it, and you have to like keep up with it, and probably have to keep power to it, so squatters don't move in, or whatever, rodents, or the roof doesn't fall in, or it doesn't get black mold. I mean, essentially you get what I'm saying. But essentially what it comes down to is like a lot of the things that were previously like an asset and generating money and bringing in financial gains are now going to cost you money, especially if you have a bunch of properties and you can't find someone to live in them because they're like nicer and everybody's moving to like cheaper places or whatever. Or if one of these crazy situations comes in and the government like nationalizes everything, including like housing and healthcare, and all of a sudden like they fix like prices on rent or mortgages or values on assets, and you can no longer sell them or buy them or trade them without their approval. I mean, a lot of crazy stuff can happen. And I guess my point is, now that I've gone in this whole tangent and made a long video, and I'm still not going to edit it, essentially what it comes down to is, in the end, there's so many factors that all you can do is look at history and read these important books, where like basically like geniuses of the past have documented these things, to help people not make the same mistakes, or those that are savvy to it to, benefit from those. And, that's us. We're the people that are savvy to it. And, the fact is that this never happened before. We've never had a situation like this with, like our monetary policy the way it is. Even, the situation in the past, like housing market crisis, stock market crisis, it was never like this because we have like the pandemic on top of it. And like even the pandemics in the past, and the stock market crashed in like the, 1920, 30s, 28, whatever, even the Great Depression and all that stuff, you know, it wasn't the same because people didn't have the same level of credit extended to them. There wasn't the same level of like leveraging. We didn't have the same monetary policy because we were still on like the gold standard back then. I mean, there's just so many different factors that you cannot take into account. And that's why if anybody tells you like they know what's going to happen, like it's not true because no one knows what's going to happen. But you can study the past and have a good idea. So, but that's it, guys. Did a little bit of the crypto technical analysis, did a little bit of the traditional as well. You guys know how I feel. We're at most likely we're at topping areas, not bottoming areas. So the last thing I would be looking for is a trade right now. And to tell you the truth, I'm just going to throw this up here real quick for you. For all the Elliott wave technicians out there, what does this look like? One, retracement of the one. That's a retracement. So we dump, we retrace, we dump lower, we retrace, and where does it go? 1, 2, 3, and then the retracement from 3 cannot go past the peak from 1 by more than a wick on a highly leveraged market on longer time frames. So I'm on the 4-hour. Obviously, this is not like a longer time frame, just because that's what I was on from Bitcoin. But essentially, my point being that if Elliott wave, if this is an impulse to the downside, essentially what we're looking to happen is 1, 2, 3, 4. This has to top out right here at the bottoming of 1, and then 5 can come wherever it wants. I mean, we can come down here, we can come down double bottom, or we can come down to like new lows. But an easy way to just get a rough idea what you can expect, we can just take the measured move off of the previous one, and I would assume like statistically it has a very high likelihood that the wave 5 down here is going to be the same length as 1 or 3, like similar between 1 and or 3. So basically, if you wanted to have just a rough idea what to expect, I think, oh look, and of course that's just where I randomly put it at. But yeah, I mean that's what, that's essentially what yeah, I mean, and look at that. That would essentially be coming down here for like a double bottom basically of this whole situation, which is going to come into like crazy line with one of these. Okay, look, that would come down here and basically be like the 886 of the dump. So I mean, yeah, we could, maybe we did top out or bottomed out already, but I doubt it. I would be much more likely to say that we bottomed and potentially be moving back up to the upside here if this Elliott wave 5 wave structure completes. It lines up with the 886 of the Fibonacci, and yeah, I mean I think that's very high likelihood. So well, there you have it, guys. Like I said, though, be very careful in these markets. Uncertainty is obviously more so than ever before. Be safe out there, and to everybody that's new to the community, I appreciate you guys, and I do really encourage not only you liking the videos and watching them, but take the time, please, to comment. I do really appreciate it as it helps with the YouTube algorithms and growth. And as many people have expressed to me, they wish they would have found the channel, my technical analysis and indicators sooner. And the only way that that would have been possible is if the people that got here before you did would have taken the time and effort to do that. So you can essentially be the one who pays it forward. And I would really appreciate that if you did. So there you have it, guys. Crypto Trend Trader, and I'm out of here.